Hey everyone, just wanted to say hello before I head off for a vacation with my family. I'm going to be out of the country for the next week and a half or so, and wanted to touch base with you on some things that are going on because we're getting a few phone calls, and just want to make sure everyone is on the same page. If you recall, I did a video a month and a half ago or so about some upcoming changes in the REIT space, and would like to remind you, go back and review that one. We're going to talk about that a little bit today as well. But as I'm trying to get some things ready to go, get out of town for a week and a half and be out of the office, I'm going through snapshots. As many of you know, we've gotten a little behind on those snapshots this spring. That's been due to a number of factors, not the least of which is, thank the Lord, we've been blessed with a lot of growth, so we have some new clients on board, but also some regulatory changes in terms of the reporting environment, what we're able to report, and we're really kind of operating in a little bit of gray area, providing this manual snapshot that we do. We do that, of course, years ago. I started doing that out of necessity for myself, because as an independent firm here, we've got lots of moving parts, as you know, and that's on purpose. That's by design. That's so that we can not invest in the market like the rest of the sheep. However, because of all those moving parts, it can be confusing. If you think you're confused, take a look at 75 of those per month, and you see kind of what we're dealing with. So we're doing our best to keep getting those out to you in a timely manner and keep ourselves from running afoul of the regulators. Just understand, we are working very hard, spending a lot of time and money, frankly, on finding that compliant aggregated statement that we can provide for you. So stay tuned for that. We'll be back with you on that soon, and we're going to ask a few of you to be guinea pigs for us to try that process out. So just thank you for your patience. We're working diligently to get those done here. Now back to the REIT changes. Some of these snapshots, as we have been working through them here, I'm noticing that the new valuations are showing up. You're probably seeing the same. Don't panic. Don't be concerned by that. Nothing's changed fundamentally. Nothing's changed how you get your income, with the exception of one REIT that changed from a cash payment to a stock payment for a temporary period of time. And you all know who those are. I think I've communicated with everyone on those. That ARC Hospitality REIT, the hotel REIT, is now paying a stock dividend. If you were getting dividend reinvestment before, nothing's changed at all. It's just the same dividend reinvestment at that 5% discount each month. However, if you were on the cash distribution on that, of course, now that's no longer happening. So we might I think we've taken care of almost everybody in that regard. If there were just a few of you that needed the cash from that. However, there are several REITs that have been affected by this new pricing strategy. As I said on my prior, or not pricing strategy, but reporting of the valuation. Again, nothing's changed, but as like in the financial crisis when banks were required to mark loans to the market rate, because everything was down, even though it might be a performing loan, it still came in at a discounted rate. If you don't intend to sell today, then that valuation really doesn't matter. It's kind of just an erroneous, if you will, valuation. It's fairly meaningless, because the income's being produced, the capital gain will be achieved at the end. Just as a reminder, if you're buying regular old real estate directly, you've got fees associated with that. We went through those in the video last month. Those fees can't be recouped the next month if you sell the property. You might get the value out of the property, but you've got some sunk costs that you're not going to get out of it. And as you know, any kind of real estate carries those kinds of costs, including investments in REITs. So just remember that. If that's difficult to follow, think of this simple analogy. If you're going to bake a cake, if a cake decorator is going to bake a cake for a wedding or something, they mix it all up and put it in the oven. If you take it out in 5 minutes, it's not a finished product. You got to let it bake, let it finish baking, then ice it, then decorate it, all that stuff for it to be of its full value. And it's the same thing here. So nothing's changed. Don't worry about that. Some that might be affected. One that was affected greatly was BDCA. If you own BDCA, That was affected really because of the mark-to-market value of loans, because BDCAs, business development corporations, make loans to mid-level corporations, as you recall. And loans are down across the board right now. If you're in publicly traded loans, it's down. Non-traded, those values are down. But we're not selling today. The distribution is still close to 8%. And your cash that's coming out, still the same. No changes there. Any questions at all, please call me. But I won't be back in the country for until after the 17th of July for those phone calls. Hopefully this answers your questions. Now, one other quick reminder before I take off for vacation is that really for the most part, the Dow Jones Industrial Average and the S&P 500 index don't matter, okay? Brexit came and went. Our portfolios just held in there. January, same thing. We're not investing like you have been accustomed to investing in the past. Just a quick reminder of that, because I've had this conversation a lot lately, and just having to remind folks, and I'm happy to do it, but I want to do it kind of en masse here before I go so that my staff's not fielding a bunch of calls while I'm gone. S&P and Dow really don't have much, if any, effect whatsoever on your portfolio. You know, for any investments that we have in the market per se, we are hedging those things. We have some sort of strategy to get out of harm's way, like the W.E. Donahue strategy that went to cash last July before the Dow crashed 1,000 points, waited it out till February to get back in. Like the portfolio thermostat that was actually short Europe and Asia, short small caps, all those things which benefited greatly from the Brexit sell-off, and then we got out of those. So those issues are protected. Otherwise, we're doing things that are off Wall Street, non-traded, your GWG, your REITs, those types of things that are just straight income producing type of investments with some capital gain potential on the back end as well. So don't worry yourself looking at the Dow and S&P daily. Don't worry about looking at even the snapshots monthly are informative, but they're not real helpful in the scheme of a long-term investment strategy. Think endowment, think Yale, Harvard. We're talking about household endowment modeling here. And so we're in it for the long haul. Certainly we care what quarterly and monthly, or quarterly and annually, these returns are like. And trust me when I say that we at Kennedy Wealth Group are looking at everything you have on a monthly basis at least, and we'll make recommendations as we have done from time to time if changes need to be made. But just want to leave you with that as kind of volatility kicks up and the election year comes along, and what's the Fed going to do? Will they, won't they raise rates? We keep an eye on all that stuff, but those types of things will not have the kind of impact on your portfolio that they've had in the past when you were invested in mutual funds with 70, 80, 90% stocks and some bonds, and if you're real exotic, some cash or some real estate. Hopefully this is helpful. I look forward to seeing many of you, if not all of you, at the Rita's in the Park in August when I get back from vacation. And hope you all are having a great summer. Again, as always, if you have any questions about your specific situation, something doesn't look right, please do not hesitate to give us a call. Overall portfolio things, though, for now, we've got a good eye on them. Hopefully this explains the REIT repricing, and that all makes sense. I look forward to talking to you soon. Have a great summer.